day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black.
Are we recording?
What?
Yeah.
All right, welcome back to Noobs. This is, what is today? The 8th of December. It is Monday, and what do we got? A market that is kind of down. The only thing up on the day is the Russell. We got volatility. Futures up small. We've got the actual VIX index up 1.5 almost. Then we got gold down, silver down, crypto up, Bitcoin up, and Ethereum up. And it looks like oil is actually down $1. So a decent down move in oil, big down move in natural gas here. And we are down on the day in your account as well. So, but okay, go ahead and mute Josh here. Mute. Did you mute him?
Mm-hmm.
So now, remember we said we were going to take Ethereum off on an up day. It's up today. So let's go ahead and close out Ethereum, the ETHA. I closed both of them today. I mean, you've already made 80%. Do them one at a time. It'll be easier. Yeah. Yep. See if you can get 14. I won't get filled at 14, but look at that. You did. Okay. And then see if you can close that one for 40. Look at that. Bada bing, bada boom. So that was $120, basically $119 that you made by selling into a down move in Ethereum. You'll see Netflix. I put a new position on here for you, Netflix, and it is not working today. I did this last week. Basically, willing to buy Netflix at the $95 level. If you want to open that chart, you'll see kind of why I put this on. We got Netflix coming off of its highs again, trying to sell what's into a down move. You get paid more premium. Netflix had a reverse split. This was I don't know what you just did.
Zoom down.
No, you clicked on a whole different underlying.
Oh.
This is volatility. Zoom out, not in. Zoom out. Out. There you go. So you see how Netflix has rallied the beginning of the year all the way up to where it peaked out at about 134. And now we're coming off of those highs. Netflix had a reverse split little couple weeks ago. It was trading at, I think, like $1,100 a share. So they did a 10-for-1 reverse split. Meaning they 10 times the amount of shares that you had, but the value of the shares is cut by that amount. So like if you had, say, 10, let's say at $1,000 a share, you had 10 shares, which would be $10,000 worth of stock. You'd still have $10,000 worth of stock in a reverse split, but instead of having 10 shares, you'd now have 100 shares at $100 per share. So they do that when stock prices get to the point where it's difficult for like retail investors to even own one share of it. They'll split the price of the stock to make it more affordable for people to own it and trade it. It just adds liquidity. And companies will frequently split their stock, not frequently, but like Apple has probably had like 6 or 7 splits over the course of it being a company because the price just keeps going up. So they continue to split it and you get more and more shares. So like 100 shares of Apple. Well, I'm just going to ask Google how many, if I bought 100 shares of Apple on the IPO, how many shares would I have now? If I bought, how many do you think? Take a guess. Hello?
Yeah, I'm here.
Take a guess.
So does it divide? Like, does it get like, or does it double? Like, does
Depends.
it multiply or divide?
So like when you do a split, all right, so like when you do a split, it takes, for every one share you get a certain amount of more shares. So like in this example for Nvidia, it was $1,000 or so. So for every one share that you had, you got 10 shares. So if I had 10, I now have 100. If I had 100, I now have 1,000. But the price of the actual stock is reduced by a tenth, or not a tenth, by a 10x basically. So instead of it being worth 1,000 a share, now it's only worth 100 a share. So the monetary amount, if you had $10,000 worth of Nvidia, you still have $10,000 worth of Nvidia. It's just before $10,000 of
Okay.
Nvidia was
Yeah.
10 shares at $1,000. Now it's 100
When the
shares
price
at
goes down
$100.
and the shares go up to meet the price, so it keeps it the same.
You increase the number of shares and reduce the price of the stock. For a split, for a reverse split, they do the opposite. So they take shares away and increase the price of the stock.
Okay.
A reverse split is usually not a good thing. A reverse split means the stock has gotten to such a low point and has gotten so low that it's going to be delisted, because there are rules to how high your price of your stock must be in order to be listed on certain exchanges. So what companies will do is they'll vote to have a reverse split in order to maintain and stay listed on the exchange. So like if my stock's trading for 10 cents, I might do a 10-to-1 reverse split where you have 100 shares. Well, now you only have 10 shares, and instead of those 100 shares being worth 10 cents, now your 10 shares are worth $1 each.
Okay.
The opposite. When the price is really, really low, it's a reverse split. When the price is going up, it's a split, a stock split.
Uh-huh.
So if you had bought 100 shares of Apple on its IPO,
What an
this is
IPO?
an IPO is initial public offering. So when a stock or when a company takes their company public, meaning I'm going to go from a
This is
private company.
when it came out. So you're
Yeah.
saying when the 100 shares when it came out?
Yes. So if you bought Apple back when it IPO'd, when it first came out and was available for the public to buy, you would have bought 100 shares. Now you would have 2,240 shares. So just with the stock splits, Apple, just by owning it and not selling over the course of the entire life of Apple, every 100 shares that you bought back then would now mean that you have 2,200 shares.
Okay.
2,240, because of all the different reverse splits. So the same thing with like this Nvidia here, you just 10 times the amount of your Nvidia shares. I mean, ultimately, it doesn't really do anything monetarily for you. But what it does, if the stock continues to go up and up and up and up, is it gives you more shares that you can then sell more calls and do, and it just makes the stock more accessible. And usually stocks only split when they're successful and they go up to the place where they're not feasible to trade anymore. So then they'll do a split. All right. Anyway, so we're saying that we'll buy Nvidia at $95 a share. It's currently trading at about $96 a share. So far, it has not worked. It's done nothing but continue to go down ever since I sold that put. So that's actually a worse position today, down $180 overall in that position, which is actually bringing your whole account down. So sorry about that, but I think it's not a terrible position to be in. End of the day, you'll just be entering into some long Netflix stock at around $95. I think I collected close to $2 for selling it. So it's really, you're entering at $93 is your break even point. So what else we got? We got Oracle working today. Your metal PAL position is working today. Tesla not working today. Tesla's down $10 today, or 10 and some change. So go to Tesla here. What do we got? We got your 600. No, you're at the 380. I think you leave that. I don't think you touch anything in there. What else is working? So your applied here today is continuing to work. You went from being down several $100s in here to now up 120. I think this might be a good time to go ahead and take your risk off there and applied, or you could widen out your strikes if you want and remove the shares and widen the strikes. So basically, like, sell your shares. Yeah. And now go into your options chain. We'll decide if we want to get out of this or widen it. So when I say widen it, basically you'll be buying back the straddle, buy, and then like go down to the 23. Now keep the same expiration that you moved an earlier expiration. Keep the same expiration, and then like on the put, look for around $1 on the put side. The 22 or the 23 strike. 22, okay. So sell that, and then go out on the call side. Go higher up, higher up, higher up. Collect around $1 on the call side too. Would put you up, no, up to like 40 something. The call side. You remember what calls are, right?
Mm-hmm.
Higher. You got to go higher on
Oh,
the
you're
call
looking
side.
at the wrong thing. Where do you see $1?
When I say higher, I mean higher in price. So yeah, he's the 120. You see that right there? The 45 or the 50 strike. Yeah, I'd probably do the 45. Yeah. That'll give you around $2 in premium overall. We're going to pay $7 to close out this straddle, and we're buying back the guts, selling the wings, reducing risk, getting away from the stock price. Go ahead, do that. Didn't get filled. You're going to have to take it higher because you're paying a debit. That's good. I don't think I'd take it much more than that. I'll let that sit while we're figuring out what else we got to adjust, if anything, today. Oracle up, NVIDIA. Oh, look at NVIDIA. You're almost back in the green in NVIDIA. What's it doing today? A nice up day in NVIDIA. We've got $6 in your calls. Your shares are working, and your puts are working. I don't think you touch NVIDIA either. You leave that be. MU. All right, so this one is continuing to rally. You probably want to roll. I had Lex Friedman playing in the background. You probably want to roll just up like $5 or so. Take it all the way up to the 85, I guess. 85 gives you another $1. Yeah. You get filled. You got filled. Okay. So your MES position here. What did
47.
how are you up? What just moved? Something
know.
moved in your favor.
But we're up past 47
We
again.
must be rallying. Are we rallying? We are rallying. Look, dear. All right. So go to your MES position. I'm going to show you while you're up. So remember when we sold initially this call right here? This that you don't have anymore. You see the call that's gone now?
Yeah.
We sold that for like 50 or 60. We put in a working order to close it at 40. Well, that got hit today. So, but also what I did is I sold the other side of this strategy here. So into this little rally that we're seeing right now, this is starting to work. So we legged out at probably the best price because it's now $5, almost $6 higher. And now this put is starting to actually work as well. So we legged out into the down move and now into the up move. This one's starting to come back and work in our favor. So that's helping you. And then you've got the Russell, which was just up, now down. So the Russell, Yeah, that one's pretty flat. I don't think you touched that one. You can put in a working order to close the MES if you want, and just put in a resting order for that too, like you did the other one for /MES. So what did you? Well, you got to see what you sold it for first, but trade price 36. Okay, so like 20, I would put in a working order, buy it back at 20 if we get there.
I don't know if I remember how to do this.
Wait, is this in December? It's only 11 days left in this. Huh. Okay.
How do
There
we
you
do
go.
this?
You click on the buy. That's a sell. Yep. Buy. Next. Then you change that price to 20.
Oh yeah, this to this.
Good till cancel. 20. Yep. View and send. There you go. So that'll continue to work. And if we get a nice bounce, that'll come off automatically. You freed up about $800 in capital by selling those applied shares and rolling your risk out in applied. So you're back to almost 3,000 available. And what else? Archer. I don't think you touch. Yeah, I don't think you touch anything else. The only other thing that you could possibly do would be selling the other side in Netflix. MP not working today. I don't know if you want to sell the other side of Netflix, but it might not be a terrible idea since this is now you have $4 in premium on one side and 0 on the other side. So go all the way out and see what you can sell to collect $1. No. Go higher up because we want to stay bullish. What's the 110 giving you? 90 cents? Do like the 115. Just yeah. Not much. Probably not even worth it, honestly, but yeah, I think you go ahead and do that. Yeah. Do 152. See if you get filled. There you go. So that's going to give you a range of what, 95 to about $20 range or so in there. And it's going to help you just a smidge on the downside if this thing keeps going down. Yeah, I think that's all you do unless you had any we do have Oracle earnings coming up, so on Wednesday I think we'll put on like an actual earnings trade or adjust this pretty aggressively to go through earnings, and then we'll do some like actual earnings trades that are short-term earnings trades, so like that expire at the end of the week, and just take like maybe a 50-50 shot or a 60-40 shot in there. Oh, look at Google. Remember we said we were going to cut some of our losses in Google in a down day? I think this might be the day. What do we want? You got just some. I think you cut that first spread there, that 300, 305 long spread. Yeah. Close up. $1.40. It's up to you. I mean, you can leave it on. This is the first nice down day we've gotten in there in a while. Yeah, I think you probably go ahead and cut it. Because that trade has done nothing but not work. Leave the other one. Yeah, leave the other one on. That'll give you a little bit more profit potential in there. What's that one trading for, the other spread? In Google? What is that trading? mark it to close.
Hmm.
Click on it. Click on that spread. Both of those contracts. Click on both of those contracts and say close. It's marking at 258. Okay. So if this one's actually under this 1 or 310 at expiration, you're basically will be at a scratch in here. So I say we leave that on for now. I think that's everything. Short,
Alright.
sweet, to the point. Any questions?
Nope.
No questions. You didn't really do much at all today. You didn't have much to say. You never have much to say. Are you learning anything?
Yeah.
What are you learning?
Well, we kind of just did the same things as normal.
What are we doing?
Moving out. Or, well, today we sold or closed
Taking
some
profits when we have
positions.
them.
Like for that one, it finally got down to not being such a big loser, so we took off the risk.
We cut a loss. Yeah, we cut a loss into, and we waited to cut it into a move into our favor. So this Google hasn't worked at all since from the time that we first put it on. So like instead of cutting it when it was trading at 320, we wanted a down move to get out of it because, I mean, sometimes you're just wrong. That's part of trading too. Sometimes you just put a trade on and you're wrong. Like knowing when to, I mean, you honestly never know what a stock is going to do. It could continue to go down, and it would have been better to leave it on. But with such a big move in a position that didn't work from the very beginning, not even a little bit, I don't necessarily love that. So like, especially with such a strong stock that Google's been so strong lately. What else? What else did we do?
I talked about a split and the reversal split.
Yeah, we talked about what an IPO is. What is IPO?
It's like the first, like when they open to public.
Yeah, it stands for initial public offering. Initially or publicly offered. Initial public offering. So like companies that recently had IPOs are companies like Google a couple years back, or not Google, I'm sorry, Uber a couple years back, Lyft a couple years back. Angel Studios was a IPO, the one that we're trading here, Angel Studios. There's a bunch of them, but SpaceX is looking at IPOing here very soon. It's a private company that Elon runs. But I think as early as like the first or second quarter next year, meaning the first 6 months of the year, SpaceX is looking at IPOing. So all those satellites being launched into, what in the world is going on? All those satellites being launched, and then all of the what do they call those things that you can get internet? Starlinks. All the Starlinks. You're going to be able to own a part of that in the very near future if you want to buy SpaceX stock. But that's kind of how it works. All right, that's all I got. Well, thanks for watching, everybody. If you like the content, don't forget to like, subscribe, and come check us out in the Discord. Hang out with us, and we look forward to seeing you. Thanks for watching. Bye.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. contracts, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market play, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity tried, choking on the sand. Profits and losses, they'd rather go play bands. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Candles rise and fall. Risk and reward, it's a game of all or no. Options open, future